The markets are off to a boring start once again this week, but that is going to be short-lived. There's a lot going on between earnings, economic reports. We could see a lot of volatility, and I am here for it. As we get into that, please hit the like button, subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a couple guys who love talking about the markets, nerd out around this stuff. That's what we're going to do today. So please do all of your own research before buying or selling anything. Kev, we were talking before the show. TradFi markets flat as a board. They were just like that last week. We're waiting today for earnings to come out. We have earnings all week long. We got economic reports starting tomorrow through the end of the week. What are you looking for as we begin the final week of April?
Yeah, it's just it's extremely boring. I think PCE might be something that I think might give some life to this market. Again, we were talking about how earnings might not even play impact in how we're seeing some of this being traded. But I think PCE, again, is still going to be most important because we're looking at Powell and the Fed and their meeting, I believe, which is next week. And, obviously this is the last important piece of data that we're getting, along with, I forget.
We got quite a bit of data this week. So let me get into that right now. I'll go day by day. There was nothing today. Tomorrow, we have some housing data around new home sales and the home price index. So going to give us, you and I were talking before we started recording about the housing market. We're going to get some more data around that. On Wednesday, we get durable goods orders, retail inventories, and wholesale inventories. So some more data surrounding the state of the consumer, how much demand we have out there, what are people spending their money on. Thursday, we have GDP for Q1. So a lot of people looking at that number as well. We also have initial and continuing jobless claims and also pending home sales on Thursday. So a big day there. And then Friday, we have personal income, personal spending, and the PCE, which is the Fed's preferred inflation data point. So a lot going on this week from an economic standpoint. I do think that the GDP number, it's going to get revised. Like that'll probably get overblown a little bit because this is just the first Q1 number. We'll get the second revision and then the final number in the coming months. But there's high expectations around it from what I'm hearing, that like people are expecting it to be a really good reading for Q1 GDP. I'm not so sure about that. We had the Fed beige book last week, and that led me to believe that it may not be that strong of a number. So I'm wondering if we do see it come in under expectations, does the market react strongly? Are we going to start to see people more people talk about recession?
Yeah, definitely. And again, what's the actual definition of recession? Like 2 quarters of negative GDP growth. And we kind of had that last time, but they didn't acknowledge it. Maybe this time around they will. But again, this is also the week that Biden's supposed to be announcing his reelection campaign. So I don't know, man. All these revisions and everything, it seems like they're just holding up this narrative as long as they can that everything's, fucking peachy. But eventually this shit's going to hit the fan. When it does, we're all going to smell terrible.
Yeah, absolutely. And then on the earnings front, this is a very big week. A few of the names today, we got Coca-Cola and the interesting ones, First Republic Bank and Credit Suisse. Yeah. Tuesday, we got Microsoft, Alphabet, Visa, McDonald's, and GM. So a lot going on there. Wednesday, we get Facebook. I guess they're going back to being called Facebook now. Boeing, Hilton. Thursday is Amazon, Intel, Southwest. Friday, we got ExxonMobil, Colgate, Palmolive. So there's a lot of big companies from different sectors reporting this week. Tech, as usual, taking the main part of that with Microsoft, Alphabet, Facebook. So a lot to parse through there. But like I said at the beginning of the show, I don't know how big of an impact reporting is even going to have anymore because no one seems to care unless it's directly discussing what the Fed is going to do. Right now, we have it at a 91.5% chance, basically, that it's going to be 25 basis points. That seems pretty locked in. My question becomes, if we see a hot PCE number on Friday, do we start to hear rumblings of a pivot to 50 basis points? Because no one's talking about that. Everyone, and this is what could rattle markets, everyone is expecting a good PCE rating and 25 basis points this month, and then the Fed to pause in June. But if we get hot inflation, we could see talk of 50 basis points. We could see talk of 25 in the next meeting as well. So I don't think we should get too comfortable quite yet.
Yeah, I completely agree. And again, I kind of love it how the market thinks it's smart by pricing everything in. Like it's trying to outperform the market or anything that happens before it actually happens. That just seems so. That's just perfect for market makers, obviously, to dump on people. But also, I personally don't think that PC is going to come in good or bad. I think it's just going to be kind of at expectations this month. I think the next PC data potentially could be pretty bad. And again, I'm trying to, maybe I'm an idiot too because I'm trying to price things into, but like OPEC, again, that's going to
Yeah.
be getting bad into the summer. 1 month of that effect, maybe not too much, but maybe like once we get into May, leading into June, could get a lot worse. And again, we're seeing some issues globally. We're seeing possible civil war in Sudan. That's not good. There's tons of Americans that are over there too. So there's tons of global conflicts, things going on that are still really bad. People are kind of not focusing on. Everyone's just kind of focusing on, okay, 25 basis points and then pause. Can't guarantee you that. One bad PC reading is going to be could be detrimental again. I don't think the Fed's going to take their foot off the gas. I think they've definitely done some poor decision making in terms of, the level that they've done the rate hikes for. But at the end of the day, I don't think they're going to give up on this battle. And if they do play it out as long as they have to, and they're just, really bad at raising it 50 basis points when they need to, this could play out for a long time, which is possibly even worse. So I think we'll get a decent PCE reading. Do I hope I'm wrong? I really don't know. Maybe so we get some volatility in the markets, but for right now, I think that everything's going to seem okay. We're going to get the 25 in May, and then May we might start to see some of that negative impacts of oil, some of the global conflicts, and then I don't know, maybe the market finally reacts to some shit earnings.
Yeah, oil's been hovering in this 77 to $80 a barrel range, which is up significantly from a few months ago. So I agree. I think we will see that. It was trading as low as $64 a barrel back in March. So that's a big increase in a short amount of time. And it will absolutely play into inflation at some point. Now we all know that like one of the Fed, they always remove energy from energy and food, but at the same time, it's going to impact things to some extent. Like they can't completely ignore it. Like we are going to see the price of goods going up as a result of oil going up. So
Definitely.
We're not out of the woods yet by any stretch of the imagination.
Yeah, I completely agree. Again, it's even just transporting goods that's going to fucking be affected.
We're also seeing more and more countries start to move away from the dollar, which is absolutely impacting the DXY. Do you want to look at that first, or do you want to get into anything else before we start to look at some of the charts?
No, let's go into the DXY. Always happy to talk about the US dollar because, again, tons of people are counting this one out, but who knows? Things can change very fast overnight when you least expect it. Here's the DXY. We're looking at this on the daily. Again, we're at 101.367. On the stochastic RSI, it looks like we're coming down from overbought towards the oversold area. It's probably going to start making its way down over the next few days. Again, key level support right now is 100.845. That's this white line right here. We can see that we hit a bottom, then we started climbing. I think we just need to correct, and we could still just trade sideways consolidation before we start to move to the upside. I'm not giving up on this one. Again, there's a few things I'm not giving up on in terms of, their rallies being over. I think this is just corrective right here. We've seen the dollar obviously taking some heat from several things. We could talk about inflation, people kind of pricing in the end of, Fed rate hikes. We could talk about other currencies kind of, having more dominance over the dollar and the dollar losing dominance across those other currencies in Forex. So there's a bunch of things that are really impacting it. And I think a lot of this is news based, news driven, but like we talked about, one bad inflation spike, or any inflation spike really is just going to send the dollar hurtling up to the north. Like it's going to go up. Again, that's just the way markets react. They overreact sometimes when they least expect something to happen. So you can just see this massive green candle to the upside. And I think it's primed on the weekly too. If we look at the weekly, the stochastic RSI, extremely oversold, undervalued. We're down here. We already wicked off this. I think that we're going to start to see this progress over the next few months. And again, my thesis is that this is going to play out into the end of the year. I think we're not going to see, if we do start to see this thing rocket, we're not going to see, the levels of 114 and maybe 122 if it gets really bad until maybe Q3 into Q4. This is it's just a long play. Again, this is something that we're going to have to monitor, but I do think that we could start to see some progression to the upside drastically if we get some bad inflation data. So right now, nothing too concerning. If you lose that one level of support down here at 100.845, obviously there might be a little bit of concern, but as far as I can see, the 50 and the 200 are still somewhat far apart from each other. So if we start to see some progression, this 50 is going to move up fast in the 200, and then they'll probably just go into the progression until we find some resistance, and then that possibly be the end of a bear market. I do think that once we tap on the dollar, that's the end of the bear market, and you'll start to see it come down as risk assets push up.
Okay. Speaking of risk assets, let's talk about Bed Bath & Beyond real quick.
Let's do it.
If you want to pull up their chart. So they declared bankruptcy yesterday. Shocking, I know. The latest data from Bloomberg puts retail traders' losses at almost $140 million in Bed Bath & Beyond. And if we look back, we can see, I mean, look at how crazy Bed Bath & Beyond went back, back during like the meme stock mania, and it's now trading at 20 cents. It's dead and gone. But this is just a reminder that if you're going up against hedge funds and they're shorting something, retail is not going to win in that long term. It just isn't. The game is structured in a way where retail cannot beat these hedge funds. So if you're in one of these, if you see this play out again in the future, just take your damn profits. Don't be one of these people who is like, we're going to beat the hedge funds and I'm going to ride it into the ground. Like, don't do that, please.
You're definitely going to ride something to the ground, but it's not going to be the hedge funds. It's all Robinhood has to do is take away the buy option and you're fucked. They've done it once. They'll do it again, but we'll see. But Bed Bath & Beyond. Unfortunate. But again, bankruptcy is something that we weren't surprised by. Bankruptcies and unemployment are something that we kind of anticipate, something very, very similar to 2008 when there was tons of bankruptcies for a lot of these companies. So if this is the first domino to fall, then tip my hat to Bed Bath & Beyond for being the first victim of 2023. But looking at this, absolute destruction. I mean, it's still trading at 20 cents, which is probably overvalued. I don't know. I'm not going to tell you to trade this thing. You might get one of those things where Terra Luna shoots all the way down to like 20 decimal places, and the next day it shoots up to 18 decimal places, and people make millions of dollars over a few hours. But this is just, I think this one's obviously it's done. It's declared bankruptcy. So maybe it comes back in the future, but for the time being, right now, that thing is. Invite me to your funeral, as Jim Cramer would say.
My heart breaks for all the mothers out there who are not going to be able to use up all of their 20% off coupons from Bed Bath & Beyond. I mean, my mom has 50 of them on her at all times in case she needs to use all of them. Like it's truly devastating.
It's sad. No more. You're going to have to order your slap chops on eBay and your ShamWows somewhere else. And then what's the other thing they used to sell? Like their Sharper Image massage chairs.
Oh, they sell everything. They sell everything. It's the greatest store in the world.
Universal Remote.
All right, let's move on past that. I was looking at the chart for First Republic as well. Like we said earlier, they're reporting today, currently up 10% on the day. One of the big gainers right now, because there's expectation that deposits. Yeah, I mean, look at.
I didn't expect that too.
That needs to go in the highlight reel.
I was expecting something a little bit more impressive when I opened the charts up, but obviously it's too macro. They got to zoom in a little bit.
Yeah, there you go. You got to really zoom in to book a win. But we saw that big candle. It it wasn't ideal. It wasn't ideal. We went. God, how far down was that and how quickly? Let me measure this real quick.
That's a Citibank candle.
That is down 85% in 1 day and 1 hour.
Nice.
It went down. That's remarkable. That is remarkable. Oh, sweet mother of God. But if we really, really zoom in, that's it's ripping.
It's not bad.
So that's not bad. Pretty good. That is so that's one we're looking at right now as well. They're reporting today. Expectation is deposits are increasing, things are stabilizing there. Need to look into their holdings of corporate real estate loans or
Yeah.
commercial real estate loans, because more and more data coming out, San Francisco is almost at 30% vacancy for commercial real estate, which is far worse than even the dot-com bubble, how things were out there. So, and who knows if any of this is going to bounce back, right? Like with remote work, with everything, like there's just, people don't really need that super expensive San Francisco real estate for businesses anymore. So who knows if it's going to bounce back, what that property is going to be used for. If I wonder if if some of these places start to offload their buildings, is that like a worthwhile investment to use for something? I don't know, to house more servers. Like at this point, what else do people need commercial real estate for? So that's going to be interesting to see how that impacts some of these smaller regional banks as well.
Absolutely. Again, like we were talking about before the show, unemployment, housing, artificial intelligence. That's a triumvirate right there of just mass destruction that people aren't anticipating. So it'll be interesting to see. But again, I don't know. A lot of people working from home now. You don't necessarily need to be in the office, but also maybe some of those people who are getting, working from home are the ones to be laid off first. So who knows? We're just going to have to see how this plays out. But definitely seems like that's you're going into the deep end over there if you're in commercial real estate or if you're in any of that tech sector right now. Absolutely devastating if it's worse than the dot-com bubble. So
yeah, that's not great. All right, anything else we want to look at on the charts?
Yeah, absolutely. We're gonna go to Bitcoin. Doing some crazy conspiracy theory shit over here, as you can see, doing some Elliott wave theory. But again, this is the only. I'm not super deep into Elliott wave theory, but I know enough where I can see if there's a structure forming. And for Bitcoin, this is one that I've just been charting over the weekend. So obviously, the top of that pattern there, where the blue line begins. So right here is where we got rejected. This is where I think we hit our local top. I do believe that we put in the local top now, and then we're in this impulsive wave to the downside. I do think we'll probably have a corrective wave, but for the time being, I think that the top has been put in. Open to being wrong on that, but I think this is a pretty good move to the downside that kind of signifies it.
Where are we at now? We're at point number 4.
We're we're into a fourth wave. So let me explain how this is. So there's waves within waves. I know this is gonna get fucking complex because it confused the shit out of me when I first started learning this.
Man, you know that I can't keep up with this.
So there's 3 waves and there's 5 waves. 5 waves are more impulsive. 3 waves are corrective. And so you find 3 waves and impulsive waves down when you get the correction. So this would be where you'd find it in the wave 2 to the upside, and then the wave 4. And see right here in the wave 4 where we've been trading over the past few days, even the past few hours, really. We got the 1 wave to the upside, came down a little bit for a correction, then we pushed to the upside, and this forms the wave 4. But then after that, it's followed by impulsive 5 waves down. Super confusing, but other words, it's pretty easy to track this stuff once you start looking at it.
So where do you think the downside is for wave 5?
For wave 5,
do you think we'll get there?
I think that it's going to be,
because we're gonna check back on this.
Absolutely, I think it's going to be right down here. This 26,600 to 26,700. I think that this offers a pretty good amount of support, and how everything's been lining up. Obviously, I charted this all yesterday, and minor tweaks, just moving the lines because sometimes plays out a little bit longer than expected. But for the most part, these waves are lining up, and we're right now in the wave 3 of this wave to the downside. So I anticipate us to probably go down a lot more before we get a little bit of a bounce. And then finally, hitting this sometime this week. I would anticipate in the next day or so. Realistically, it'd be a shorter time frame. This is lower time frame. This is just the move that we're seeing. But then that's followed by a 5 wave down. I expect a 3 wave corrective move, and this would take us probably to around 28,800, close to this bottom of the supply zone where we got rejected. And we can see that this is obviously the bottom of the supply zone. If we get rejected from there, then it's going to be 5 waves.
Does this line up with Mercury being in retrograde?
Let's see. I think the end of it is no, maybe not. Maybe I'm fighting the astrologist, or I'm not trying to.
They said until May 5th is when you got to be most concerned. So
I will say this.
See who wins.
I will say this. If they are right about something crazy happening on May 5th, being the end of it, I'm okay with it. I'm very okay with this market just saying fuck the wave count and everything like that and just going to shit. But I'm trying to be realistic here. I'm just looking at the structure that's playing out. And again, I've been talking about this head and shoulders pattern for a few episodes now. And let me just get out of the 1 hour, just go to the daily. Man, I got too much shit on this timeline. But
yes, you do.
And
I got to clean your shit up.
I need to get myself together. So we're talking about this. Here's this left shoulder, the head, and then we're waiting for the right shoulder. The right shoulder would be after we get our bounce to 28,000.8 around there. And then we get the drop down to somewhere in this red box range. Once we find support around here, which I anticipate to be around 23 to 24,000, we probably get one more test to the upside where we're just going to play it out on this side. And this is such a market maker pattern, in my opinion, just seeing how low demand is. And then, the price shoots up. I anticipate it to play out the same exact way on the other side. Does it have to? No. I mean, we could have Binance or another bank just absolutely go tits up, and then we just shoot straight down. Then we're just in a new structure. But I'm looking at this, probably going to see this head and shoulders play out on the macro. This could go all the way till, I think right now I got it till July. It could go a little bit earlier, sooner, later. Could play out, depends. But this is with the big play, I think, for the time being. But the thing that's really interesting to me is I know that we're going to get this bounce to the 28,000. I can't say that for sure, but I $6 my left nut tells me that that's going to happen.
What? That's not a saying. That's not something that like people say. You just like.
Well, have you ever? I think the original saying is
Shannonism or something like that from your family.
No, it's $2 my left nut. We're not landing in Des Moines or something like that. That's from Planes, Trains, and Automobiles. So if you're a fan of that movie, John Candy definitely says that to Steve Martin.
Last time I watched Planes, Trains, and Automobiles, it's been a minute. Real quick, back to the astrology thing. If we are thinking that May 5th is lining up, we got on the 3rd the next Fed decision, and then on the 5th is the next employment report. So maybe that's what does it. Maybe we get a bearish or a hawkish Fed and then a bad unemployment report, and that could be what sends us down. So who knows?
Nah, I want something worse than that. Like I want like a black swan. I would anticipate if we're gonna
a black swan.
Well, if we're gonna go into this astrology thing, where I think Marin was the one who said she expects something similar to like tie up FTX, because the last time we were in eclipse season, that was when FTX collapsed. So she anticipates like this to be wrapping up the entire cycle. So I'm like, all right, I'll go with that if that's going to play out that way. But if it's something small, I'll be like, oh man, that's kind of disappointing. But
so we need like an earth-shattering kind of disaster is what you're expecting.
Something like that, yeah. Where, again, that's how she explained it. But again, astrology, I'm not going to trade off of it, but I do think it's really interesting, and I'm not going to knock it off if some people are making money that way. Like if you're able to make money doing that, God bless you. But looking at this right here, this is pretty much the pattern that I'm seeing for Bitcoin. I think that we are going to see a bounce soon, go to that 28 level before we start to make our move to the downside. But the one thing I really want to watch on this bounce to the 28 is Bitcoin dominance. Because a lot of people, let me get this off. I don't even want this on there anymore. But a lot of people have counted out Bitcoin dominance at this point. They say that we're going into alt season. However, Bitcoin dominance hasn't really moved that much since it came down. And there's a difference between, I sent this tweet out last night. It's
not alt season, it's meme coin season. We got
Pepe,
we got Gensler, we got Wojak. We can talk about the anime coins. There's Naruto, there's Goku. Like there's all sorts of there was Yellen. I mean, we got Janet Yellen's got a coin.
I didn't pick any of that up.
MAGA token out there. Like this is some really strong, the backbone of your financial portfolio being launched here in this shitcoin season. Meme coin season. Sorry to the person who got offended that I said shitcoin so much.
Yeah, it's these are precious coins. They're gonna bring a lot of people out of poverty. Maybe they do. I don't know. I'm not a meme coin expert, but I definitely won't be picking any of them up personally. I'm looking at Bitcoin dominance though. The difference between where we were last time when we saw that big collapse from 34,000 to 17,000, that was right here. So we can see that it's a very different structure here than it is here, where you're hovering in this area for a lot longer of a period, which is similar to what we did down here and down here. So a lot of people said, it's over. It's meme coin season now. Alts are going to start pumping. I don't buy that. I think we're consolidating right here. And I think that the daily is pretty much showing that, there is still room to the upside. Maybe we have to retest this 50 moving average on the daily. or what is it on the weekly? Let's see that. Now we're high on the weekly. So maybe the weekly has one less leg to the upside. I really do think that the weekly does have a last leg to the upside. If it does shoot up, I mean, that's 200 EMA is looking pretty nice up there. And again, that could absolutely happen in the next move to 28,000. But we need to watch Bitcoin dominance when Bitcoin does make that move, because 100% if we start seeing Bitcoin dominance shoot up, alts, it's pretty much over for alts. There's no mercy for them, because once that dumps, if they're hurting on the rise up, they're going to hurt even more on the ride down. This is going to be absolutely catastrophic for, I don't care what coin it is, Pepe, Gensler, Yellen, Solana.
I mean, we're already seeing alts get beat up. I mean, if you look, we talked about Chainlink and how overpriced that was.
Yep.
A week and a half ago when it was up to $8.70. We have Matic breaking below $1 now, and it's sinking pretty fast. So
that one pissed me off, man. That one still kills me. Coinbase screwed me on that one.
I don't know how people are really saying that this is alt season. I don't get it. They're getting bloodied, and we are not in like a bullish macro outlook either. So I don't know why people are so confident that we're going to see these running, and maybe I'm missing something here.
Well, they're doing the next
my
best
money
thing.
On the side. Yeah, what's that?
Lie.
Yeah, that's true. Yeah,
they're doing everyone else who's got fat bags and they need to get rid of them. Why? It's easy.
It is PvP time in the crypto market in a big way. You don't know who to trust. And that's why I don't play this. Like, I learned from my years playing poker for a living that if I'm not, if I don't see myself having an edge in the game, I'm just not going to play it. And I do not have an edge in the shitcoin game, so I'm not playing it. It's just not going to happen.
Yeah, man, I pulled up Ace's counter here. It's time to sell off the shit coins when BitBoy Crypto is shilling Pepe. When any of the influencers are shilling the stuff, it's never a good time to be in the markets. Yeah. Again, I'm not going to go after Ran every time, or anyone, or BitBoy. Everyone knows how I feel about these influencers. I'm trying to make sure that people have a realistic outlook on this stuff, because have I been hurt in the past when I first got into crypto? 100%. It's a good learning experience, but at the end of the day, we're going to cut the bullshit. We're not going to tell you to buy stuff or anything like that. We're going to just give you the evidence that we see from the charts and also from the macro. But yeah, I mean, it's absolutely insane. Yeah, he's also 2 weeks late. Like Pepe was, 2 weeks ago. And if you're showing that right now, I woke up at 2:00 this morning to the futures on Mexi Global saying Pepe is down 19% in the last hour. Wonderful. So
I'm looking at the Pepe chart right now. It's just so ridiculous.
Is there even a chart on TradingView?
Yeah, the Pepe USDT pairing on Poloniex.
Speaking of Poloniex, you know who owns Poloniex?
Who's that?
Justin Sun.
Oh, baby.
Oh, man. Is this the one that's going to go under? I don't know. But, yeah, this is stupid. I mean, this is stupid. This is coin called Pepe. I don't know what to say at this point.
This is stupid. Hey, you know what? People said that about Doge, and Doge is still around and kicking. So,
well, here's the difference between Doge and Pepe.
What's that?
About 9 years.
Hey, listen, you're just getting on the ground floor. Then is what I'm hearing.
I guess this is start building.
All right, we're almost at half an hour. Let's wrap this up.
All right, sounds good.
Going off the rails here.
So let's just wrap it up with Bitcoin dominance. Obviously, we're going to see a bounce once we hit that level of 26, probably 26.6 around there. But Bitcoin dominance, I don't think that this game is over with yet. I do think that because of the consolidation period that we're seeing on the daily at this level, and we haven't broken to the downside past, obviously this peak, I think there is another good push to the upside. It's going to decimate alts on the ride up, ride down. I might be wrong, but that's what I'm seeing right now. And I think those structures that, we're using Elliott wave theory right now for are holding pretty strong. I think this market's absolutely manipulated. If we're looking at coins that are manipulated, Binance, I don't know, just saying that, I'm throwing that out there. Funding rates are absolutely stupid right now, while everything else is, acting pretty normally to the rest of the market. But we'll keep an eye on that. But yeah, that's all I'm seeing right now. Again, Bitcoin dominance, I think that's going to go up a little bit further, and I do expect a bounce coming soon before we get a rejection at that 29,000 level. So that's all I'm seeing. Nothing too crazy. Everything just seems to be playing out as is. Just going to wait for these structures to finish.
Okay. That is going to wrap it up for today. Thank you, everybody, for watching. Tomorrow, the rest of this week, we are doing uploaded videos. I'm heading to Austin tomorrow afternoon for Consensus. So really looking forward to that, getting around some of the crypto crowd, seeing how everyone's, I like going to a lot of the events for work, but also you get a good gauge of sentiment and, where some of the people, the people who go to these oftentimes tend to be a little more level-headed. The Moon Boys don't tend to frequent these things. So excited for that. Get an idea of how people are viewing the crypto market and what kind of cool stuff is being built out there. So we'll have videos. They're just going to be recorded and uploaded later in the day. So no live for the rest of the week. And I'm very excited to get down to Austin. So if you have not yet, please hit that like button, subscribe to our channel, drop a comment, share us out. Any of these things, they help Kevin and I a ton. We appreciate it. So we'll be back tomorrow. Have an awesome rest of your day, everybody. Kevin, we'll see you next time.
Take care, everyone.